Welcome to the Deep Dive. We're here to plunge into a stack of sources, really pull out those key nuggets of knowledge, and maybe some surprising facts too. Today, we're diving deep into a really fascinating and honestly a pretty cautionary tale. It's the story of Vroom, the online used car retailer, their incredible rise and, well, their catastrophic collapse.
Yeah, our main source for this is an article called How Vroom Scaled Too Fast, Lied to Customers, and Crashed. It's quite the case study. Tech, startup excess, operational failures, you name it. Our mission today is to figure out how a company with, a genuinely brilliant vision, billions in valuation, how did it end up in bankruptcy? What are the takeaways here?
And that's exactly it. This isn't just, another failed company story. It's packed with vital lessons about business fundamentals, consumer trust, which is huge, and just the hard realities of the market. These apply everywhere, really.
Okay, let's set the scene then. Vroom wasn't always struggling. It actually started back in 2013.
Right, as Automerica originally. Yeah, Automerica. Then it got rebranded. Ellie Wortman and Alan Block took the helm.
Right.
And their vision, it was simple, but pretty radical for the time.
Totally. The idea was get rid of that awful dealership experience. No more haggling, no pressure, just digitize the whole thing.
So how did that work, practically?
Well, the model was pretty streamlined on paper. They'd buy used cars from all over the country, ship them to a central hub in Texas for refurbishment, list them online, sell them, and then deliver straight to your door.
Wow.
Yeah, it was meant to skip all those traditional car buying headaches. And for people fed up with dealerships, it sounded amazing. Transparency, convenience. It really took off initially.
Okay, let's unpack this. Imagine never having to step foot in a dealership. Sounds incredible, right?
It absolutely does. And for a while, it looked like a rocket ship.
It really did. By 2015, their revenue hit, what, $900 million?
Astonishing growth, yeah.
Then they bought Texas Direct Auto that needed a $90 million funding round, and boom, they were squaring off against Carvana.
Right, direct competitors.
And it just kept going up. By 2020, they sold 34,000 cars. Revenue hit $1.36 billion.
Huge numbers.
But here's where it gets really interesting. The IPO, June 2020, they hit a valuation of $2.48 billion.
Billion with a B.
And later, their market cap went over $8 billion. I mean, they were absolutely flying.
They were. But, and this is the crucial but, despite all that explosive growth, all those massive numbers, Vroom was never profitable.
Never. Not even close.
Not really. And this wasn't just like a small loss while scaling. It showed a fundamental issue. They were scaling revenue, sure, but not a sustainable business. They were just hemorrhaging cash. Look at the losses, $143 million in 2019. Then $202 million in 2020, and then 2021, a staggering $370 million.
$370 million in 1 year.
Yeah. And get this, that single year's loss was about half of all the money they'd lost since they were founded. It was accelerated.
So you've got this paradox. Billions in valuation, headlines, growth, but underneath just massive growing losses. Was it just that typical startup strategy, burn cash to grab market share? Or was something else going on?
Well, yes and no. Burning cash isn't unusual, but...
Because they kept spending, right, despite the losses.
Yeah.
They bought CarStory, that AI analytics firm,
right,
for $120 million.
Right.
And United Auto Credit Corp, UACC, for $300 million. Mostly debt-funded, wasn't it?
Mostly debt, yeah. And that acquisition strategy, while maybe intended to help, just added more weight. But the real vulnerability compounding the cash burn was their heavy reliance on floor plan financing.
Floor plan financing? Explain that a bit.
Think of it like a dealership's credit card for its inventory. They borrow money to buy the cars they want to sell. It's common in the industry, but...
But for Vroom?
For Vroom, with their model and scale, it meant they were paying huge amounts of interest on cars sitting in inventory, especially if they weren't selling fast enough. It massively increased their risk. It works when cars fly off the virtual lot, but it's disastrous when sales slow down. You're just paying interest on depreciating assets.
Okay, so you got massive losses, aggressive spending, and this risky financing model. What actually triggered the collapse? It feels like a perfect storm brewing.
It absolutely was a perfect storm. The first big factor, over-reliance on market timing. Vroom got really good at riding the wave of the COVID-19 pandemic.
How so?
Well, think about it. The pandemic messed up supply chains, right? So new car production slowed, used car prices shot up. Vroom benefited massively from that price inflation.
Okay.
And at the same time, interest rates were rock bottom. That made it cheap for people to get car loans and cheap for Vroom to finance its own debt, including that floor plan financing.
So they were writing these very specific temporary conditions.
Exactly. It was a huge tailwind.
Mhm.
But the problem is tailwinds don't last forever.
Right. So what happened when things changed?
That's when the strategy became unsustainable. Supply chains started to normalize eventually. Interest rates soared to combat inflation, and used car prices, they started to drop.
So everything that had helped them suddenly reversed.
Precisely. That tailwind became a massive headwind almost overnight. It's just fascinating and scary how quickly market dynamics can flip on you if your whole model depends on them staying favorable.
Wow. Okay, so shaky foundations relying on temporary market conditions. That's one thing. But wasn't there more? Something darker.
Oh, absolutely. That brings us to the second and maybe even more damaging reason. Huge operational and, frankly, ethical failures.
Customer experience part.
Exactly. The complaints were just staggering. Over 5,000 customer complaints rolled in. We're not talking minor issues here.
The kind of things.
Things like failing to transfer car titles. Imagine buying a car you legally can't drive because the paperwork isn't done.
That's fundamental.
It is. Customers couldn't locate cars they'd already paid for. And then there were the misleading claims, that 184-point inspection. Often, it seems like pure fiction.
What do you mean?
Cars were being delivered with serious problems. Worn-out brakes, bald tires, engines making grinding noises. Things that clearly weren't caught by any rigorous inspection, if one even happened.
That's not just bad service, that's dangerous and deceptive.
Completely. It wasn't just sloppy, it felt dishonest. And it led to serious legal trouble.
Legal trouble, like what?
Well, they got hit with a 47-count complaint from the state of Florida. The Texas DMV cited them for over 80 violations. And just recently, in 2024, the FTC, the Federal Trade Commission, sued them.
What for?
False advertising, broken delivery promises,
Yeah.
basically, for not delivering what they claimed. It really makes you question the core integrity of the business, doesn't it? Especially when you're dealing with something as expensive and important as a car.
Absolutely, when you betray that trust.
You lose everything, which leads right into the third consequence, broken trust.
Yeah.
Despite their size, despite the initial hype, the name Vroom just became toxic. It stood for lies, undelivered promises, hassles. That customer trust, it just evaporated. And once that's gone, it's almost impossible to get back.
So this perfect storm market turning against them, operational chaos, legal battles, destroyed trust. What was the final chapter?
The inevitable fall. It happened pretty quickly once the dominoes started falling. January 22, 2024, that was the day they officially announced they were shutting down the e-commerce side.
Okay.
Done.
Wow, just like that.
Pretty much. Which meant laying off over 800 employees. A huge number of people impacted.
Yeah, the bankruptcy.
Yep. November 13, 2024, they filed for Chapter 11, bankruptcy protection.
Chapter 11.
Yeah.
That's reorganization, not liquidation. Right?
Oh, correct. It allows the company to try and restructure its debts and operations, hopefully emerge leaner. And they did emerge, technically, in 2025, debt-free. But as a shadow of its former self. Basically, all that's left now are the companies they acquired, UACC, the finance arm, and CarStory, the analytics firm. The grand vision of revolutionizing online car buying, that's completely gone, collapsed.
Okay, let's unpack this whole journey then. We've seen the rise, the red flags, the crash.
Yeah.
What are the core lessons here? What should you, listening right now, take away from the Vroom saga? Because this isn't just about Vroom, is it?
Not at all. These are universal lessons. I think there are 4 really critical ones that jump out.
Okay, lesson 1.
Growth does not equal success. It sounds obvious, but Vroom is a prime example. Scaling incredibly fast without solid operations, without a path to actually making money. It's just a high-stakes gamble. It rarely ends well.
Right. Growth for growth's sake isn't sustainable. What's number 2?
Customer trust is incredibly fragile. We saw it clearly here. One broken promise, one lie about an inspection, it snowballs. Thousands of complaints, lawsuits. Your reputation is ruined. You have to protect that trust above all else.
Especially with big purchases like cars. Okay, number 3.
Market conditions are temporary. Vroom built its model, or at least its rapid growth phase, on unique pandemic conditions, high used car prices, low interest rates. That's dangerous. You need a business model that can withstand shifts in the market, not one that depends on favorable winds blowing forever.
Because they always change. Makes sense. And the final lesson.
Don't fake it. Sounds simple, right? But lying about inspections, delivery times, title transfers, it's not just unethical. As Vroom discovered, it's often illegal, and it will catch up with you and destroy your business. Integrity matters.
Those are powerful lessons. Growth isn't everything, trust is paramount, markets change, and honesty is non-negotiable. It's stark when you lay it out like that.
It really is.
And you mentioned Carvana earlier. Vroom's story, while maybe extreme, it hints that the online car space, in general, has faced some serious bumps, right?
Definitely. Vroom might be the most dramatic flame out, but others in that space have certainly struggled with similar issues around profitability, logistics, and customer satisfaction. It's a tough business to get right.
So Vroom went from this revolutionary idea, this potential game changer, to really a cautionary tale about ambition getting way ahead of execution and frankly ahead of ethics.
Absolutely. And if you zoom out, think about the bigger picture. The Vroom story really makes you wonder, doesn't it? How many other disruptors out there might be building on shaky foundations, relying more on hype and favorable market moments than on solid business practices and genuine customer value?
That's a really provocative thought.
What happens when the tide goes out on their temporary advantages? It's something to think about.
Definitely something to think about as we look at innovation, business strategy, and that crucial element of trust. Thanks for joining us for this deep dive.